This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Oil prices slipped on Tuesday as traders weighed the impact on supply from Russia-Ukraine peace talks and U.S.-Iran negotiations, strong front-month physical demand in Asia and a cautious outlook for China's economy. June U.S. West Texas Intermediate crude futures, which expire on Tuesday, gained 3 cents to $62.72. While the more active July contract slipped 17 cents to $61.97 a barrel. Discussions on Iran's nuclear program would lead nowhere if Washington insisted that Tehran/uranium enrichment activity entirely, state media quoted Deputy Foreign Minister Majid Takhtravanchi as saying on Monday.
China's imports of crude oil from Russia fell 12.9% in April from a year earlier, coming in at 8.07 million metric tons or 1.96 million barrels per day, Chinese customs data showed on Tuesday. Russian supply to China also declined 5.8% on a monthly basis, down from 2.08 million barrels of oil per day in March. Imports from Malaysia, the top transshipment hub for sanctioned Iranian oil, stood at 7.95 million tons in April, or 1.93 million barrels of oil per day, down 6.3% from March, but up 96.9% year-on-year.
Moving on to the top news in the energy sector.
The EU will propose to G7 finance ministers this week to lower the current $60 per barrel price cap on Russian seaborne oil as part of the new sanctions package against Moscow, European Economic Commissioner Valdis Dombrovskis said on Monday. Dombrovskis did not mention the level to which the European Union would want the price cap lowered, but EU officials briefed on the discussion said the EU would propose $50 per barrel. Asked by reporters if he would make the proposal to lower the cap at the G7 finance ministers meeting in Canada this week, he said, yes.
The U.S. Department of Energy will begin approving or rejecting pending applications for permits to export liquefied natural gas to countries with no free trade agreements with the U.S., the agency said on Monday, after releasing a final study on the impact of further exports. In 2024, U.S. President Joe Biden's administration paused such approvals until the outcome of the study to determine if increasing LNG exports could harm the environment or raise gas prices because of rising demand from LNG plants. The U.S., the world's largest LNG exporter, is on track to triple its export capacity by the end of the decade. The pause threatened to limit the ability of the U.S. to increase such exports. Next, we have the top news in metal markets. Copper prices in London were trading slightly lower on Tuesday as the initial euphoria over the 90-day tariff truce between the U.S. and China, the top consumer of the metal, began to fade. Benchmark copper on the London Metal Exchange was down 0.7% at $9,461 a metric ton, as of 07:07 GMT. The U.S. and China have agreed to reduce tit-for-tat tariffs and implement a 90-day pause on actions, while Washington said it would cut the de minimis tariff for low-value shipments from China to 30%.
Gold prices eased on Tuesday, as a slightly firmer dollar and optimism over a potential ceasefire between Russia and Ukraine dampened demand for safe haven assets. Spot gold was down 0.5% at $3,214.17 an ounce as of 06:27 GMT. U.S. gold futures slipped 0.6% to $3,215.60. The dollar slightly recovered after touching a more than 1-week low in the prior session, making greenback-priced gold less appealing to holders of other currencies.
We will now look at the top news in the agricultural sector.
Chicago wheat futures edged higher on Tuesday amid concerns that frosts in Russia and dry conditions in China could damage output, but improved cropping conditions in the United States limited gains, holding prices near last week's 5-year low. Corn and soybean futures fell. The most active wheat contract on the Chicago Board of Trade was up 0.1% at $5.29 minus 1/2 a bushel at 0511 GMT. Prices fell to $5.06 one quarter on May 13, the lowest in 5 years.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.